we still need to see the reforms to be successfully executed, and that is a long-term positive if they can do so. It will mean that China growth will be much more sustainable and much more higher quality. But a closer look by everyone, we know that some of the reforms that China is going to embark on, which is positive in the longer term, is actually short-term negative. SOE reforms that will make the SOE less competitive as the government reduce, their level the playing field. Interest rate liberalization, not so good for the banks. Rural land transfer, good for consumption for the rural citizen, but not so good, for land acquisition costs. For China, I'll just speak on China first. Of course, like I say, I like the IT sectors. They have been doing very well, like especially if it's the IT stocks listed in the US market, like your Baidu and your NetEase, Tencent listed in the Hong Kong. As you know that online e-commerce, online gaming, with a huge population, a lot of subscribers, that is translating into a lot of revenue growth as this company continue to monetize their huge subscriber base. The sectors that I would avoid in China are, of course, all the material sector, some of the industrial sectors, heavily leveraged with a lot of overcapacity issue. Those are the sectors that I continue to avoid. The big SOE as they implement the SOE reforms. So those will be the Chinese sector that I avoid. The banks will have a chance to re-rate because I think the banks have taken a hit too. They are trading very, very cheaply. Chinese bank, 0.9 times book. So that's the other sector that I like, but don't expect it to, to go the way out like the IT sector. The only markets that are seeing negative earnings growth. One of the reason why I'm a little bit cautious on the Hong Kong market is that I think you know better than I do. 70% of the index is really property, financial stock, property and banking stocks. And I think the consensus out there, they differ, but most of them expect property prices to come off. So I think in such a market, it is very difficult for property stocks both in Hong Kong and in Singapore to re-rate upwards. So this is one of the sectors that I am a bit more cautious than the others. If I expect property prices to trend lower, transaction volume to trend lower, I am avoiding most of the financial sectors. It is very hard for a sector to perform and re-rate when physical prices are only starting to come down, and also transaction volumes are coming down. So if you want to play what we are playing, global economic growth, world trade, for Hong Kong stocks, I would say, stick to maybe your Cathay Pacific, because a bigger portion, I normally don't like airline stocks, very, very volatile. But I think that the Cathay Pacific actually have a higher portion of cargo in its proportion. So that could benefit from world trade. The other thing is, of course, like the theme that DDA just talked about, the unlocking of shareholders' value as you spin off some non-core, maybe Hutchison Whampoa. And if you believe in the US economy on trade, very, very unloved stock could be your Li and Fung. So otherwise, like I say, Hong Kong at this moment, until I see clarity in the earnings result of the financial sectors, I will avoid the financial sectors and stick to the global theme.